What's up? My name is Whitney Hansen. I'm a financial coach and host of the Money Nerds podcast, and I am so stoked that you're here because today we're talking about how to choose an investment, specifically why I've been talking about ETFs versus index funds. So let's go ahead and dive in. Time out. If you've missed part of this series and you want to know specifically how to set up your brokerage account and how to purchase an ETF, make sure you check out this video in the comments box below, and it will teach you step by step exactly how to do it. Okay, now let's go ahead and dive in. Okay, so I'm gonna do a quick screen share and I'm gonna show you specifically how to compare costs of index funds and ETFs and pick which one might be best for you. So quick screen share and let's do this. All right, let's get started with comparing index funds and ETFs. So as you can imagine, we're going to hop over to Vanguard.com where you will then click on personal investors, because that's what you are, my friend. You are officially an investor. Okay, under this investing section, the thing that I want you to do is just go ahead and click on Vanguard ETFs. Okay, so just click on this for right now. And we're going to compare two very common ones, which are VTI, which is the Vanguard ETF for the total stock market index. Why do I keep saying index? The whole stock market. It's an ETF. It's not an index fund. So we're going to go ahead and click on this one. And this is how you can start to compare all different costs and see what is going to be best for you in your life. So under Vanguard, this ETF specifically, the cool thing is you can start to learn a few really great key indicators. First and foremost, one of the things you want to look for is the expense ratio. The expense ratio is the overhead fees. How much does it actually cost to invest in this specific ticker symbol? The other piece that I think is really important is the risk potential. When you're younger, you should be willing to take on a little bit more risk. Now, that doesn't mean make stupid decisions, but it means that you should be more comfortable because you have a little bit more time for the market to ebb and flow. If you are nearing retirement, maybe not quite the right one for you unless you're doing it for funsies. Another really important piece when you're looking through your investment, specifically, we're going to use this one as the continued example of VTI. One of the things that you want to make sure you understand is the performance. So you can either click on this or you can just scroll down. The performance is important because it tells you roughly how this ETF is doing, or index fund if you're looking at that. It gives you a hypothetical growth. So had you invested this much money, this is where you would be today. It also shows you the 1 year, 5 year, 10-year trends. These are really important, and it gives you an overall, since this ETF was created, this is what it has performed. Now that stuff is really important when it comes to comparing, because some ETFs, index funds, mutual funds have a really long track record, and some only have 10 years of history of data. This one has been around since 2001, so it's a little bit older and definitely has proved that it's a decent return. Okay, so that's another one of the things that I personally look for when I'm comparing any of my investments. And of course, you could always do the month end. You can view it as a table. You can do all kinds of really fun things, but that's one of the things that you are looking at. And it compares it to the stock market index, the total stock market index. When they talk about the total stock market index, that's like the benchmark that they're using to compare to let you know how it's doing. But again, I'm not a financial advisor, so please consult with a professional. The other piece that I really want you to understand is when you're starting to figure out, like, what specifically are you investing in when you're investing in this VTI ETF? What is it composed of? This is the industries. This tells you exactly where your money is going. Here's the cool thing too. 3,500 stocks is how many you are investing in by purchasing one share of this ETF. Just one share gets you 3,500 companies. So it's a really great way to go, and it's very diversified. Now, the other thing to note is the 10 largest holdings in this ETF, 23% is this specific composure. So all of these companies are where 23% of your money is going to be truly invested. Microsoft, Apple, Amazon, Alphabet, which is Google, Facebook, Johnson & Johnson. So you can see this is where your money is physically going. The part that I think is really kind of cool is if you come down here, you can click on compare. Now we're going to come back to that, but I just want you to see this is what a general ETF looks like. Now an ETF, just to give you a little bit more context, this is traded on the stock market. So a mutual fund and an index fund, these are traded once per day. So at the end of the day, whatever it closes out, that's what the price is. This is like a stock. So you know, stocks go up and down all the time and it's constantly changing. That's the same thing with ETFs. They're the exact same way as stocks. They're like a hybrid of the two. Let's take a look at another one that is called Vtsax. And this is a very common index fund that allows you to invest in same thing, all 3,500 publicly traded companies. Again, things to look for, expense ratio, always want to keep that as low as possible. Here's where it gets kind of crazy. Check this out. The minimum investment is $3,000 to be part of this index fund. Now, if you're a beginning investor and you see $3,000 and you think, well, what the crap, I can't invest. That's not true. That's why we look into ETFs. That's where those come in handy. They make it much more affordable and accessible for the average person, especially those that are just getting started. Same thing though, this is basically the exact same fund. Like it's the same thing as the ETF, only for an index fund. It's very, very similar. So that's kind of where you can start to see this. Now let's go ahead and compare side by side. If we're going to click on this, this is how you can compare multiple funds. If you want to look at a ton of different ETFs to figure out what's the best one for you, this is what I'd recommend, and start to compare the risk potential, the category. So see how this says it's a large blend, meaning a broad spectrum of companies. That's great. But it's not always necessary, right? So if I have all of my monies in large blend companies and I might want to get a little bit more into like some of the riskier where you can get big returns, you can do that too. But this is how you can start to compare. And then we're going to compare, let's do VTI. We'll just compare these two. Remember VTI, oh, that's my issue. I'm under mutual funds. I need to click on an ETF because that's what VTI is. So we're going to go VTI. And we're going to compare. So now you can see a clear side by side of how this actually looks. So this is how you can start to compare all of the different funds, but this is why I suggest for most people getting started, ETFs tend to be a really great way to go because it allows you to invest a much smaller dollar amount with a very low expense ratio in order to begin investing. All right, thank you so much for tuning in. I hope this was helpful, and more than anything, I hope you take action on what we talked about. Investing does not need to be difficult, but doing something is better than doing nothing when it comes to investing. So follow along with these videos and make your first investment. I'm so excited to see what you choose to do. Thank you so much for tuning in, and I'll see you in another video. Bye.